Thank you, Vinu. Very warm welcome back to many of us who were here in the morning. Just to say that we had a very, very fruitful discussion in the morning session. We had the RBI governor, and then we had the deputy governor, then we had a public sector bankers panel, and the private sector bankers panel is going on right now. And here we are with the country's topmost players in the NBFC sector. Once again, my warm welcome to all of you, those who are on the stage. What I plan to do in the next 1 hour is to essentially look at the NBFC sector, and as the name of the panel suggests, that is the dream of NBFCs becoming a bank unreal or real? And what I want to do in the beginning is to just present 3 or 4 issues that bother me as a lay person, and I will present it before the esteemed panel here, and probably request their initial observations on those issues. There is no doubt that the NBFC business is under some sort of a challenge. As we all know, that NBFCs from September 2018, with the ILFS crisis, came under a huge liquidity squeeze. And then the liquidity squeeze soon turned into probably a solvency crisis, And I would like that business challenge to be addressed by the members here. That's number 1. Number 2 is what is the regulatory framework that right now governs, and something of an issue. Is that an issue, and what could be the areas which need further refinement, or which could need further correction, or is that regulatory structure okay? And number 3 is, and as a final point, is that to what extent has technology been a disruptor or a facilitator? Has it been embraced, or have fintech companies upstaged the NBFC sector? So these are the broad 3 points that I would like the panel to really reflect on. I would request the panelists in the first round to have maybe 3 to 4 minutes of opening comments on these issues, leading up to the larger question of the panel today, that is the dream of the NBFC sector to become banks coming closer home or not? So can I start with, I'm not a leftist, but I'll start with my left because there's nobody on my right. So I will start with Mr. Mistry. Mr. Mistry, please.
All right, so your first question was on financials, about the 2018.
That's right.
So, over the years, there have been periods of time when the NBFC sector has come under some degree of stress. I can give you the example of 2013 and 2018, and to some extent for a limited period of time in 2020 when COVID set in. But I think the regulatory response at each one of these moments was very, very strong. And you saw that apart from ILFS, which was a different story altogether, not a single NBFC, sort of had to fold up or could not sustain. Also, I think NBFCs play a very important role in the market. There are sectors in the economy, particularly on the asset side, which banks are, for their own reasons, not able to lend, not willing to lend, which NBFCs do and do very efficiently. So in my view, the NBFCs have a big role to play. Maybe some kind of a backstop funding arrangement can be thought of at some point of time, where in crisis situations like you had in 2018 or 20 or whenever, there is some form of avenue or some form of funding which could be made available to NBFCs. On the asset side, they are very, very strong. On the liability side, there are some challenges which some of them face which can be tackled. Now, you mentioned 2020. 2020 was a time when we had the highest growth in deposits in a month. In the month of April or May of 2020, when the COVID crisis really happened, we had the fastest growth of deposits. So it's not that being an NBFC means that people will shy away from giving money to you. I don't think that's correct at all. On your second question of regulations, I think the regulations broadly have matched up. Today, there were differences in regulation over a period of time. These regulatory differences have all been patched up. Whether it is looking at non-performing loans, whether it is looking at just about anything. It's just the only thing left now is the CRR SLR requirement, which is there for banks, not there for NBFCs, but NBFCs don't have access to checking account deposits. And your third question of technology or fintech companies have a role to play, but in our business, for example, in housing finance, we have as our distributors, some of the largest fintech players. And the total volume of business that they're able to gather for us, honestly, is less than 1%.
Thank you very much. May I turn to Mr. Revankar?
Yeah, thank you. Not trying to repeat what Mr. has already said.
Yeah.
What I would like to say is most of the NBFC by nature or by the way evolution, we have come in as a specialist lender for specific asset classes, whether it's a gold loan or vehicle loan or housing loan. All of us have come as specialists, and some of us have moved into multiple asset classes after getting experience in that particular geography or particular asset classes. So the NBFCs are evolving, and asset side, as Mr. said, we are very strong. On the liability side, yes, we have certain challenges because we depend on wholesale funding from the bank, and many of the NBFCs do not have access to the retail deposits or loans. Some of us have only term deposit, but not having access to demand deposit itself is a good discipline for us in managing our ALMs much better. I believe the NBFCs have really grown and become part and parcel of the economy and contributing to the economy. And as even the RBI or even the government have understood this and supported us, especially during the COVID, the various support system which they provided through various methods were definitely helpful for NBFC and also for the economy. It helped the economy to keep moving. And as far as fintech is concerned, I believe fintech is an enabler. We don't see fintech as a competition, or fintech is disruptive for any kind of activity for financial services, whether it's a bank or NBFC. So if you are able to engage with them, then it helps everyone to improve our services and also to reach out to the clients or customers whom we are not able to reach so far. I think reach, speed, service, all will improve with fintech is what I believe.
Okay, thank you. Thank you very much, Mr. Revankar. I like the way we are all moving very well on time also. You know, if our answers and questions are brief, and then I think we'll have many more questions to be squeezed in. Mr. Iyer, your turn, please.
I think it's important to recognize that NBFCs have been built for customers. So the whole model of NBFC, if you look at it, is built keeping the customer at the center. And it's a very retail model. Right? Therefore, reach becomes very important. Understanding needs of the customer becomes important. And the ability to therefore design the product to suit customer needs become important. And which is why at every stage, when a challenge has been thrown at NBFC, we have bounced back more strongly. You know, the various instances that you talked of in history, every time you see after that, you have seen NBFCs becoming more stronger than before. I think the other important feature, why would NBFC survive and become larger, is the governance issue, right? In spite of the regulation, erstwhile were not very, very strong, just to pick up from where you said now they have become more stronger. But at no point of time, NBFCs have breached any of the regulatory needs. I mean, you look at the track record of NBFC repayment to banks, like Umesh said, we borrow from bank, but we are one of the best repayer to the bank as an industry, if you have ever seen. And that's the reason banks also want to lend more and more to NBFC. So therefore, you look at it from a governance perspective, I think NBFCs have managed the business extremely well. Right? And the third on the fintech and the disruption that we talked of, I think gone are days where we have to start looking at anybody as competition. I think the time has come to actually become partners and complement and work with each other. I don't think any one of us can say that we will be able to do everything by ourselves. So therefore, we have to look at how and where can we use the fintechs where they are stronger. And they are likewise looking at us as a complementary partner to say, how can they use our services as to where we are stronger?
Okay.
Right? So if you look at from a funding perspective that you talked of, I think all of us are growing at phenomenal rates, 40%, 50%, 60% growth rate each one is putting out. And we have been able to raise funds for all of that. We are all very well capitalized as balance sheets. Okay. So I think NBFCs are here to stay. And my last comment would be, I don't think any one of us want to become a bank just because we think NBFC doesn't have a future. I think we have to start looking at it as what is good for the customer and what can create more value. And therefore, if you want to, from an NBFC, become a bank, that's a very different approach. To kind of start fearing and believing that, oh, NBFC may not survive, so should we become a bank? I think if you're not well run, you may not even survive as a bank.
Oh, that's a wonderful statement. I think we'll come back to that. Yeah. Just to get it right, Mr. Iyer, you said regulation is not a problem.
Oh yeah, I've always felt more regulation when announced, all of us react to say, oh, this is very difficult. Let's take the recent one, daily stamping, which was talked about for NPA. All of us felt it's very difficult for the consumer. Mm-hmm. But finally, when we believe that that's a reality, we have reached out to our customer, we have communicated to them. And I'm not for once saying that it's very easy. But ultimately, both the consumer and the lender both gets adjusted to the changing regulation and come out more stronger. And you see any regulation, I mean, one stage 365 days was NPA.
Okay.
It was made 180, we struggled. Then it became 90, we said it's difficult. We crossed the bridge. Now daily stamping, I'm reasonably sure that these regulations only make it more and more stronger as a balance sheet.
Okay, yeah. Mr. Singh?
So clearly, I think NBFCs play a very important role. If you see in the entire economy and the credit cycle, if you see there are banks, there are small finance bank, there are payments bank from a payments point of view, and there are NBFCs, which really play very important and last mile lender in a way, because there are a lot of niche NBFCs which are there and across the country in certain segment or certain parts of the country. There are gold loan players which are very, very big and very strong. In certain parts of the country, there are commercial vehicle loans, NBFCs. So there are different NBFCs which has evolved over a period of time, as Ramesh mentioned, in terms of looking at the customer needs and what is the value proposition which we can create for our customers. So clearly NBFCs, and if you look at the kind of credit participation in terms of 19-20% of the overall banking credit if the NBFCs have, and the rate at which they are growing, I think it can clearly go up to a quarter of the overall credit which the banking industry or the economy needs. So I think the role of NBFCs is well established and has been proven over a period of time. In terms of, and you gave an example, some solvency post September 2018, there has been examples like that similar for banks as well. And it's not just that one can say that only NBFCs have gone through this. It's more a compliance and governance issue, the model with which people run, and it's each to itself in terms of the way those institutions are run. So clearly, I think the compliance and governance structure of each institution is very, very important, and that's the reason how you will build a sustainable business for a period of long period of time. And so clearly, regulations are important, and prudent regulation. And I clearly, most of us are from banks. Rajiv is from bank. I'm for 16, 17 years of my career in a bank, now on the NBFC side. So we have seen both sides. It's not that we only look at NBFC and we aspire to be a bank. So clearly a lot of opportunity in the economy, which we all have to play. Banks have to play, NBFCs, small finance banks, and regulation prudent regulation. And you spoke about the technology and the digital. I think the DLG, which the digital lending guidelines, which came from RBI recently, I think these are important regulations and interventions, because once size of this economy and the ecosystem becomes large, it will create a systemic risk. So it has to be addressed upfront in terms of what is the kind of regulation, what kind of prudence which we need. And clearly, if you look at from a regulation point of view, we are on Ind AS, which is we provide for expected credit loss for the entire life of the loan, and also on the IRAC, which is once on the 90th day. So we are on both sides, and it's quite stiff. And as again, what Ramesh was saying, it's lot to do with awareness of the customers who are earlier, they were aware that they can pay in 180 days and they're fine. So they will pay on the 175th day and they were fine. When the regulation changed to 90th day, then the same customers started paying in 90 days. Now, when the IRAC, which came, that the 90th day regulation, that if you don't pay 90 DPD, I think the account becomes NPA, and to upgrade, you will have to provide the entire critical overdue has to be paid. Now, once that awareness is created in the customers appreciate that, and majority of the customer align to that. There will be always be some part of some fraction of the customers who still will try and over a period of time align to that. But clearly, I think tighter regulations are important in terms of building an NBFC, which is a sector which is sustainable over a period of time. I think, as Mr. Mistry mentioned, the liability side is very, very important. Most of the time, the crisis comes because of the liability and not from the asset side. So clearly, banks have RBI as a last resort lender. You have in housing, you have NHB, at least you can go and get a refinance. For NBFC, there is no institution or there is no window from where you can go and get a refinance taken. I think these are the things which we need to address, so that otherwise what will happen is every 3, 4, 5 years, when there is an external crisis and banks or mutual funds or anyone stops and slows down, then there will be a question in terms of the NBFC model. So we need to find solutions on the liability side so as to sustain this sector.
Yeah, thank you, Mr. Singh. I'll come to Mr. Sabharwal, and the sense so far, Mr. Sabharwal, we have got is there's a tremendous, the positive energy is flowing in this room right now. Regulation is fine. NBFCs don't want to be banks. The NBFCs should remain as NBFCs. The problem is not on the asset side. Problem is on the liability side, which is a fair point. So what is your take on this entire scheme of things, given the way we have discussed it so far?
No, I think we have heard very good comments. Just, I'd like to add that if I ask you, please name number of banks which have faced death or near death, and number of NBFCs which have faced death or near death, your list will have probably more number of banks than NBFCs.
Okay.
It is not a question ever of NBFCs or banks. What makes an institution, even a manufacturing house, fail is either because of governance, because of poor risk management, or a business model. These are the three reasons why any entity fails, largely, I would say. And that can happen to anyone, whether it is a bank or it is an NBFC. If you flounder on these, you will fail. It does not matter whether you are a bank or you are an NBFC. So I think that is what we need to understand. And for any of these institutions go in through the long run, they will have to manage all of these. On the point of regulations, I think hats off to the regulator. The work which they have done in this area is really path-breaking. At a time when, there existed about, and today also there are about 10,000 plus NBFCs which exist in the market, we were all wondering how some sense will prevail on this. I think the regulator came up with these scale-based guidelines where they've given a clear direction on how they want this sector to progress. These are very progressive guidelines. They take into account the needs of the customers as well as the need for the companies to survive in the long run. So they've improved governance levels, capital requirements, the need to be, more information to be public, and so on and so forth. So I feel our regulator is moving in a direction in which I would say it's guiding the industry in a direction so that things become more safer. On the last point of technology and digital, I think India, in India, every industry is very competitive. You pick up any industry, it's probably more competitive than what you see anywhere across in the globe. And when you are, trying to get customer mindset or, the customer to move to you, you will have to make the experience better and better for him. And digital and technology is allowing us to do that. It is allowing us to be more customer friendly. It's allowing us to be more transparent. It is giving the power in the hands of the customer. And all of us are moving towards it. I don't think so. And today, any CEO can stand up and not talk about technology or digital in any conversation which he or she does. So I think it's part and parcel. We are just moving with the world. Some are moving faster than the others, but all of us realize that we have to move in this direction.
Okay, thank you, Mr. Sabharwal, which means that what you're saying is technology is not an intruder or an invader, it is actually part of you and we are all embracing it. I'll come back to you. My next round will come back to start with you. I just want to request the audience here that, this is not just a discussion between myself and the five distinguished panelists here. I will like to come back to you with your questions. And Vinu, I hope we have the mics here because we will not wait till the end. Whenever we have the time, we'll come back. So please be ready with your questions if you have one. Otherwise, we'll continue the discussion at this place. So that's why I hope, Vinu, we have the mics here. Okay? Yeah. So let me come to you, Mr. Sabharwal. This is a question for me to understand. Why is it, if indeed there are more bank failures than NBFC failures? There's a sense I got from many others here. Why is it that in the systemically important NBFCs, with deposit-taking NBFCs, the number actually shrunk from around over 60 to around 40 or 40 odd so? So is that churn that is happening because you think the survival of the fittest? What is really happening? Why their numbers coming down? At a time when there's demand for NBFC credit, there are sectors that are really dependent on NBFC credit. Now, why is this the business, the entities that are in the NBFC sector, actually the numbers shrinking?
I don't have the numbers, but I never thought that the numbers of NBFCs have really gone down.
The systemically important NBFCs, which means above 500 crore numbers.
Okay, I didn't know that that number has really gone down, but
Maybe ILFS effect also,
yeah, see, you look at there also and you look at the number of entities which existed in that space. According to me, either it would have been a case of poor governance or inability to raise more capital, which led to a situation where that entity decided to merge with something else, or it felt that can today probably encash a better value than later. But if you talk about all companies which have been high on governance, and I can say this for people sitting on the dais here, each one of them runs an illustrious company which has set standards in their own space. There wouldn't have been a day when capital would have been short, or because of inability to access liabilities, they would have changed their business plans. I think if you have got your business model right, if you've got good governance, if your risk model is right, then there is no reason for any of the entities, whether it is bank or whether it is NBFCs, to actually look at anything but growth. We are all lucky to be present in this country called India, which today, not only today I would say, but in the past has also supported growth for the world as whole. So today it's the fastest growing economy, and everybody is looking at how India has got to this model. So we are only riding that growth story which is present there.
Okay, thank you. What you're suggesting is probably NBFC sector as such is more sinned against than it is sinning. Anybody else would like to join this issue, Mr. Singh or Mr. Iyer? Mr. Singh wants to go first.
Yeah, so if you look at, I think post ILNFS and COVID, I think there has been some bit of consolidation in the NBFC, and it's clearly the event, both the events, if you look at, that has differentiated men from the boys. And clearly the capital or the sponsorship has moved to a better run NBFCs, better rated NBFCs, and that is one of the reasons why you will find that the lower ones, where they can't attract, let's say, capital, because from a governance point of view, from a compliance point of view, they don't fit the bill. So there has been some consolidation. And that's the reason why. So I thought I will just add to what
Sure.
you just mentioned.
Shai, you wanted to say something?
Yeah, I just wanted to add a point. I think one of the reasons why NBFCs keep surviving and keep doing well, while we are all clubbed under one industry, just look at this dais, we don't compete with each other at all. Each one of us have a very specialized model.
That's right.
And that's the reason why we actually add to the industry growth overall. Now, I'm not sure whether an auto industry won't acknowledge or otherwise, but for NBFC, I'm not sure whether the vehicle sales would have gone this large and this deeper if it was only bank dependent, right? Because the kind of first time credit, first time buyer of a vehicle whom we specialize to finance is very, very large, and it's a very interactive model. So therefore, the point that I was wanting to make is, while you will see some consolidation in NBFC does happen, but each NBFC is a specialist in their own way, and therefore the collective strength of NBFC makes the overall economy grow, and therefore we don't fall, but we actually rise.
I think that's a very, I think we have got the answer to that question, that I think this consolidation that is happening, survival of the fittest, it is not failure. Mr. Revankar, if I can come to you and raise an issue which nobody has as yet raised, and I would like Mr. Mistry also to respond if he agrees to, is that is there an issue about tax treatment for NBFCs? Is that seen as an unfair tax treatment? Are you sort of, in a sense, that some of the investments or the lendings that NBFCs does, the tax treatment is considered to be unfair, not the same as it is available, extended to the other financial entities?
I don't think there is any tax differential as such. The only differential as far as now, the way regulators are looking into NBFC and bank is the provisioning, because we are in a different, what you call accounting standards. Since we are in different accounting standards, the both balance sheet cannot be comparable. So there is definitely, the analyst or banks or RBI, when they look at NBFC and bank, you cannot really see them as on par with each other. There will be different angles. We actually provide much more than the bank, because our provisioning starts right from 30 days.
Okay, Mr. Mistry, would you like to
So
add
one or two minor differences might be there.
Yeah.
Again, I'm not a tax expert, so I won't be able to tell you. But for example, interest on deposits.
Yeah.
Interest on bank deposits gets some kind of tax benefits, whereas interest on deposits with housing finance companies or NBFCs do not get that benefit. So there may be one or two nuances like that, but I'm sure these are things which will get corrected. These are not intended differences. But as my colleague here said, the difference really between the accounting of an NBFC and the accounting of a bank is that banks follow the very traditional method of accounting, whereas NBFCs have moved to a much more stricter a much more tighter accounting regime, which is under Ind AS accounting. So, for example, as you said, provisioning. We have to make provisioning based on a completely different criteria compared to what the way the banks do it.
Okay. Can I ask you one more question, related question? The bank lending to NBFCs, which NBFCs have used quite well. Now, bank lending to NBFC is no longer treated as priority sector lending. Has that been a factor which is worrying you or anything?
I don't think so at all.
I don't think so.
To the best
Less
of my
than
knowledge.
20 lakh loan
Yeah.
is treated as a priority sector loan.
So priority sector, that redefinition of thing has not yet really worried you or
It's
caused
not
concern?
worried because that now RBI has clarified. Earlier, RBI had allowed during this crisis COVID period, every 6 months they used to give extension on priority sector lending, what bank lend to NBFC. But post April, they have made it a permanent feature. So banks can lend to NBFC for less than 20 lakhs ticket size, and that will be considered as a priority sector.
That issue has been sorted out. Mr. Iyer, you want?
On the tax, I just wanted to add, the provisions that we make on the NPA accounts, we don't get the tax benefit. It gets added back to the income for the purpose of tax computation.
Okay.
And that actually pushes up the tax rate for no reason. Whereas for the banks, it's allowed as a deductible. So that's been one ask of the industry, and I think at some stage that will get considered since all rules are getting harmonized.
Yeah. Mr. Singh, if I can come to you, is the minimum mandatory credit rating requirement for NBFCs, is that minimum mandatory credit rating that is required for NBFCs? Is that something that you need to?
No, I don't think these are the. If you look at from our point of view, we have internal rating of the SMEs. As I think Ramesh was mentioning, we are focused more on the retail and the MSME sector. And we have our own internal scorecards and internal ratings of the customers, which we do. So I don't know if
I
there is
think he's referring to bank lending to NBFC.
Yeah.
The smaller NBFCs cannot afford to get a better rating. So therefore,
So which is, I think, the point which I was mentioning the earlier, basis the rating and the governance and all, the capital or for that matter funding has got consolidated and all, and that is the reason why you see the lower end. So yes, the banks will have their own risk management and their own policies in terms of on which they will lend to the NBFCs. So below a double A or whatever they won't like to lend or whatever that criteria, but that's their own internal criteria. So
Okay. Yeah, Mr. Sabharwal wanted to add.
If I may just add, I think one thing we should remember that still in India the credit penetration is very low. Whether it is on personal loans, by personal loans I mean housing or non-housing loans, still the credit penetration is pretty low compared to any of the near developed or developed world. We also know we are on a path where our per capita income is going to multiply over a period of time, and credit to GDP ratio will go up. At this point of time, I don't think so. It is about banks versus NBFCs. I think both of them have a role to play. Both of them have, I would say, a complementary role to play in this whole journey of making credit available to the final customer. If you notice, for all of us, give or take a few percentage points, 1/3 of our liabilities must be coming from banks.
Correct.
So they clearly are, the big banks are lending on their own, plus also through us, credit is reaching to the final customer. So it is a relationship which is helping each other, but we should remember the final objective is not about a bank or a NBFC succeeding. The final objective is for that individual customer or an individual SME to get the loan when they need it. Big corporates will always get it, but do all SMEs and the individual customers get it? I think all of us, banks as well as NBFCs, are driving towards that. In certain of our paths, we may be using each other to reach out to that final customer. But the final objective is the same.
Okay. If I can come to Mr. Mistry, is the NBFC sector has a licensing issue which needs to be addressed? Licensing in a sense that, when NBFC is to start operation, it requires some sort of a clearance from the regulator.
I guess any entity, when it has to start, needs some clearance.
Is
Even when you need a bank.
Is it something that you are comfortable with? Is there something that needs to be?
I'm not aware of any issue concerning like.
See, for now to start a NBFC, you need a 10 crores equity or net worth. That is becoming mandatory from 2024 or 25. All these days it was 2 crores was needed. So the NBFC can start small. Many of the NBFCs, they even found it difficult to reach 2 crores because they are only catering to the few people. Like second-hand two-wheeler financing NBFCs, there are people. So they do a particular community or society, a particular purpose they lent. So many people did not want to grow because they did not want people to hire people and make it a larger entity. So it's their choice of being a small or large. But RBI had allowed 100% equity into NBFC. So that is something which I think there is no restriction per se, I feel.
Okay. So
You can't start a lending institution without at least 10 crores.
sure, absolutely. What I'm saying is that an issue right now? There's not an issue. Okay, fair enough. Is there any questions? Yeah, please go ahead. Yeah.
Not working.
Not working. Yeah.
Hello. Yeah, very good afternoon, sirs. As sir told that from banks, NBFCs borrow, but more banks have come to closer to closer than NBFCs, what sir started off initially. So what I want to ask is, how long we will continue to depend on banks to borrow our money and not compete with them? Why can we not be self-sufficient? When will we be allowed in future that we don't have to borrow from banks and we can also target the customers of banks also? Is that possible anytime in future?
My view is, when you look at our business, whether it is banks or NBFCs, our business is all about risk management. We are in the business of risk management. If we take too much risks, we will fail. If we take too little risks, neither will we grow, neither will we make money. We have to take the right amount of risks, measure it, and take appropriate action. Same is true for liabilities. I think all institutions, all good institutions, I'm sure who are present out here, will have multiple sources of liabilities. They are not dependent on a single source of liabilities. Similarly, within banks also, each one of them will have multiple banks from whom they have borrowed. That is again a part of the risk management strategy on the liability side. I think from our perspective, we have to widen this whole stream from where we will borrow monies so that our dependence on any one source or one entity is minimal. But wherever there is an opportunity, one should use those resources. So I don't think so there's anything wrong in NBFCs reaching out to banks, or in difficult times, banks reaching out to RBI, which also we have seen. There is nothing wrong. I think the whole system is designed in that manner so that it can help each other, so that in the long run, everybody survives with a simple final objective remains the same. Please ensure that credit reaches individuals or SMEs who need it. Again, I'm not talking about large corporates because large corporates anyway get credit. So that's the final objective. I I don't think so there is any risk there, because within that also the risk is very well divided. And there is no single client on which we have a large exposure, no single liability source on which we have a very large exposure.
Interesting. You wanted to say something?
No, there was a question.
Yeah.
No, so on this point, if you look at the recent, and you asked whether the self-reliance for the NBFC sector in future also, so the scale-based regulation which has come in, I'm sure it has come with some objective in terms of, and they want to see how these the upper layer NBFCs behave over, and how the compliance and the governance and the business models are. And over a period of time, there will be some decision which will be taken, which might be a differentiated, some license or some way of reaching out. Because one of the challenges for an NBFC is we can only take care of customers' one need, which is the borrowing need. Customer has multiple needs, which we are not in a position to really provide that to him. And for that, I think some point in time, and that's the reason why this regulation has come in, and you will see over the next 2-3 years or 4 years that there will be some changes which will come in.
Mr. Iyer wanted to add something.
No, I just wanted to add that if bank lends to finance company customer, they will have recovery problem. And if we lend to bank like customer, we will have margins problem, which is why both models have created. So let's be very clear that we shouldn't be unnecessarily trying to overlap with each other, and you will have this issue to tackle, right? If at all you want to lend to a bank customer, now a new format has come, co-lending. Please work with the bank and lend to the customer. Why do you want to go and lend to that customer? Which is where in the marketplace overexposure is happening. That somebody is already lent to a customer, the banks have said limit is over, then NBFC says, oh, here is a great opportunity to give more money to the same customer at a higher rate, and then jointly we create bad customers. I think discipline by the lender, whether it's bank or NBFC, in the aspiration to grow, don't give up on discipline. Make sure that if somebody is worth so much credit, don't exceed that credit for your balance sheet purposes. You will have an issue to handle. So please don't look at competition and try and say, oh, if I get another institution who can give me money, I can compete with bank. I think that's not going to work. We have been created for a specialized purpose. Let's focus on that and get going.
Mr. Mistry, you wanted to say, add something?
No, I would just add that don't look at banks and NBFCs as two completely different constituents. We are all part of the financial system in India, set up with the objective of providing funding to people who need the funding. And you should look at banks and NBFCs as partners rather than competitors.
Fantastic. We have one more question before we come back to our discussion again. No, I think a mic has to be given.
There's one more question there. I had one question. The mic was with you. हमारा 4 में से एक ले लो यार, क्या करोगे इतना?
No, it's all right. I think you keep it with you.
We have one question from there as well.
Yeah, fair enough, yeah.
Sir, today banks are very reluctant to finance RA, resolution applicants. Now, what is the decision
Sorry,
of
you have to be clearer.
Reluctant to finance?
reluctant to finance resolution applicants at IBC? So, if somebody who is bidding at insolvency as a resolution applicant, then banks are not willing to finance. So, how you NBFCs are considering such proposals?
I think the question is that resolution financing is not happening. Am I right?
It is not happening in spite of COC is mostly from the banks, but they are not ready to lend the new applicant.
But that would be a question in my view. If we please,
Can we lob the question to the bank panel?
I think this is something that has to be taken on prudential terms. So probably
Most of them could be a large ticket and where we have no specialization. See, ultimately, NBFCs work on specialization.
Yeah.
We don't lend to a business activity where we do not know, where we don't have specialization. Therefore, we keep it off. So I think banks would be better fit, or there are alternative funds which have come into India who lend into this kind of application. There are.
There are, sir.
Yeah.
But they then take good amount of profit rather than our own NBFC should take it. Because that big ticket size is almost over. Now most of the cases are in MSME, where you can apply your due diligence, consider, and then take a decision.
Definitely, we consider, I think we need to build some kind of a skill set and specialization in particular industry. If it is MSME also, there are so many industries there, whether it's a trading, manufacturing, or farming. And once we understand the segments, I think respect to NBFCs, we will take it. Definitely, yes.
Just let me quickly add, unless the opportunity size is too large, we should not jump into just taking one proposal because somebody else is not doing. The opportunity size has to be large enough for NBFC to allocate capital, right? It's at the end of the day, it's an allocation of capital that we'll have to look at. And therefore, if the industry size is not large enough or the opportunity is not large enough, I think we will resist. But on the lighter side, if we sounded like we are no problems and we are very energetic, we don't want to add more problems to ourselves. Let me tell you, we have enough of them.
I think we can go to that last the question on the.
Yes, and
Sir, your views on co-lending model.
Sorry?
Your views on co-lending model. We keep listening that NBFCs have started working on co-lending model. So how will it impact on the Indian economy coming time, sir?
No, I think it's a great move. I personally think that it's one of the very, very good initiative. And for a very simple reason that there are good customers who we source and probably we can't lend them at a rate that they are looking for, and as well as quantum, right? So therefore, the two good institutions can come together and meet the final aspiration of that customer. I mean, we started with, ultimately these models are built to meet the aspiration of the customer. I think it's a great model where the aspiration is met both in terms of quantum and the rate, and when you give a large quantum, even the period. So from an ALM perspective, from a rate perspective, as well as from the size of the opportunity, I think it's a phenomenal model. And then the risk is also shared accordingly, right? I mean, in the proportion of how we are placing the balance sheet with each other. So I think this is one of the best models, and it will really serve the needs, and the consumer base actually will broaden because of the three aspects that I said.
So is there, sir, any criteria that NBFC needs to take care of?
No, obviously it has to be a well-run NBFC, high on governance, sufficient capital, NPA should be under its control. We should not be unreasonable in terms of charging. Our sourcing should be good. So there are very typical criteria. Even if we were to put out our capital, we will use the same norms. So it's not something very difficult to kind of reach out to. So the norms are pretty normal, and we would have applied the same principles.
The regulation is already there. The RBI circular on co-lending is already there. So we are all evaluating in terms of how do we work with different PSU banks and all. I think it has to be the journey and the experience has to be created where there's not too much of fall off between the two institutions. So I think this works quite well with a lot of fintechs, but I think we need to really do and really replicate it with the large PSU banks. But the opportunity is huge from a co-lending point of view.
Fantastic. There's one more question from there. Yeah.
Hello, am I audible?
Yes, you are. Yeah.
So I just had to ask this one question that maybe NBFCs don't want to become banks, but isn't CASA like a very big benefit which NBFCs can benefit from? CASAs.
Did we say we don't want to become
NBFCs do not have access to CASA right now. And I don't think it is likely to happen because, see, what is CASA? CASA is the demand deposit. Demand deposit means you need to keep excess liquidity with you all the time to keep servicing the customer. So the regulator has consciously decided that NBFC, because NBFC normally lend to a less banked customer, so underbanked or unbanked. Yeah. So because of that, I think the CASA access to NBFC is something which we are not demanding, but we would prefer to have more retail deposit or term deposit, because right now it is restricted to only 1.5 times of the net worth. If it increases, we'll be very happy to tap into that.
Yeah, Mr. Iyer wanted to say something.
No, I don't know from where you got the impression that we don't want to become a bank. So let me first clarify this to you. I think what we are all kind of putting out is NBFC by itself has a great future. that nowhere concludes that nobody wants to become a bank. So let me first clarify that to you.
Right, all right.
Second is, if we become a bank, we'll get the benefit of CASA. If we don't become a bank, as NBFC, we have enough sources and there is a set of customer whom we can service on this basis. So they are two very independent approaches.
So
I would just add
please,
one.
Mr.
I would just add one thing, that both NBFCs and banks have their positives, have their advantages. You have to look at both of them separately. Just as there are CASA requirements for banks, there are also certain other regulatory costs on a bank because of the CASA. So you have to weigh both of them. I'm not saying banks are better or NBFCs are better. Both have a very important role to play in society.
I think what is very clear is that the NBFC sector must undertake a very serious awareness drive on explaining what is NBFC and what it is not and what it wants to be. So on a lighter note, my final round of questions, if there are no questions here, is just two questions. I think Mr. Sabharwal or Mr. Singh talked about refinancing options as becoming problem. I mean, can we throw some light on what needs to be done or what can be done within the current policy framework? The refinancing options, which is virtually absent, can be addressed.
No, completely. I think this is the point Mr. Mistry also mentioned, that the liability side. Today, there is, every 4 or 5 years, there's a question mark on the NBFC sector. That's only because in a stress environment, which can be driven by anything, global financial crisis in 2008 and 9, post that, the refinance window for NBFC. So banks have, and yes, there is a cost attached to that, but banks have RBI as a last resort lender. For NBFC, there is none. You have to depend on the banks, you have to depend on the market institutions, mutual funds, pension, all these institutions to borrow. So clearly there is a need that, and I must tell you that no one might avail of that facility which is created. Because in 2008 and 9, there was, for a brief period, I think the government has created a window to provide refinance. No one took that refinancing. But at least it gives you a comfort that the last resort, if there is a liquidity issue which is there where the institution can go and borrow, they can pledge their receivables and all, and they can borrow. I think that is what is needed, and something should be done at the NBFC sector level.
Okay.
Yeah.
Mr. Mistry, you are the veteran here. What do you think should be done to address this refinancing option problem?
So he made a very valid point that banks have some form of excess. There is a cost attached to it, but there is an excess. NBFCs don't have that. So that is one issue. Now, securitization globally can be seen as a model where NBFCs who have the assets could be able to package their assets, securitize their assets, and raise money against that. That is an avenue which is being explored, is being done, but maybe that volume could go up over a period of time.
Okay. We are coming to the end of this excellent discussion, I thought. And my final round of question would be to all of you, and which is that imagine a situation where the restrictions on corporate ownership of industrial houses owning banks, that is diluted or taken off. How many NBFCs would actually be very keen to become banks? So Mistry first.
I think it depends on each group. I don't think it would be fair or correct to sort of make a very general statement.
Sure.
There are certain other conditions, like for example, ownership of an entity in a bank cannot be more than a certain percentage. Some industrial houses may not want their ownership in the bank to be below that level. So there are many such other issues which need to be explored.
Mr. Ravankar?
What I feel is, what is most important is the kind of customers whom we are servicing. If you are servicing mostly underbanked and unbanked, then you have a flexibility being an NBFC to service them. And if you are wanting to become a bank, when your customer is mostly underbanked and unbanked, it is unlikely that it will become a good transition. So It depends upon the customer. I believe the respective NBFCs have to take a call. What is the best vehicle for them to service their customers?
Okay, Mr. Iyer?
I have three comments. One, your question assumes that we are not wanting to become a bank because the regulation is not allowing it.
Well, it doesn't, it was slightly to provoke you.
I think fundamentally one has to look at what do you want to do as a bank versus what are you doing as an NBFC. Right? If you want to continue to do what you're doing, I'm not too sure is bank the right format. So therefore, each houses, like Mr. Mistry said, will look at as to how one wants to look at it or whatever. I think my other comment is not related to that, but you said NBFCs have to make more publication about how important they are. I think if the word N is dropped, we are called non-bank. I think the N should be dropped. And we can probably be called as bank-like finance company.
Okay.
BLFC. So then I think automatically everything will be known.
You're saying bank-like financing companies.
Thank you.
That's a new phrase. We'll keep that in mind. Mr. Singh?
No, so clearly we will have to see and evaluate what are the guidelines to become a bank. And every corporate house or every institution will have to evaluate and assess whether it fits into their business model and a sustainable business model over a period of time. But clearly, I think if that comes in, it will be a big opportunity for the large NBFCs, and we should definitely evaluate and see how do we want to take it forward.
Okay. Okay, absolutely. Mr. Sabharwal, your last word?
I always believe that we all have to work within the regulatory framework, and I don't know whether daydreaming is good. I think we are very happy where we are. We feel there is a huge opportunity for the NBFC as well as the housing sector to grow, and we should tap that opportunity. So that is where we are. We are happy growing what we are doing.
Okay. I think, in business standard, we take pride in starting a meeting on time and ending it on time. And thank you very much, gentlemen, for taking part in this discussion, throwing fresh light on the various issues. The broad message, if I were to write a headline on the basis of this discussion, is that NBFCs are happy with what they are, and they are not very keen or dying to become banks.
NBFCs have a great future.
NBFCs have a great future. I think my job is at stake, Mr. Iyer will take away my job. Thank you very much. I will hand it back to Vinu.